So, hello guys, and welcome back to your own YouTube channel, Waves of Wealth, and I hope you guys are doing well. So, first of all, I'm extremely sorry that I could not make regular basis videos like I used to do it earlier because of some personal commitments. I was unable to deliver the regular basis videos. But if you are a Telegram subscriber, then you have not missed out because we post regular updates on Nifty, Bank Nifty, or any of the stocks that we come across, and we think that's a very good opportunity to trade on this particular script or the particular space. Then we have definitely shared our views on the Telegram channel. So if you are not joined our Telegram channel, please do join. And if you have not subscribed to our YouTube channel, please do it right away. So let's start without any delay. So we'll start with the Nifty first. And this thing is pretty clear. We've already shared this that 1 5 advance starting from the COVID bottom is completed, and after that we are in a continuous correction phase. So it's been almost, let's check how many days it has been passed since we have made an all-time high in Nifty. So we'll just check the rate range from the top to today's date. It's been almost 241 bars, or let's say 353 days, so almost a year. Like, it started in October 2021 and we are again in the October 2022. So it's been almost a year and Nifty has done nothing. Like, it's been there since a year and it has done nothing. So it has been a very good sideways consolidation, or let's say a correction or a distribution. You never know, because these patterns seems very fishy to me, and many people are currently claiming that it should go to the all-time high and it should break the all-time high levels and should go above 20,000, 20,000, 25,000. So it's all good and fine until, so I will be on your side once it crosses this 18,600 all-time high. I'll be betting for the bigger bets as well. But until it doesn't do it, so I am still at the short side, because the structure, what it is looking at this moment, is not an impulsive structure, and it will trap many people. See, because those who are very, weak, and they have just started to understand this Elliott wave, they don't know it properly how to mark these levels. They are marking this, because I've seen many people doing this. Like, this is how they mark this: 1 2 3 4 5 as wave 1 2, and they mark this 3 4 and a 5. So they mark this as a 5 wave advance, and from there it's just a 3 wave fall. They suppose, I mean, they're anticipating that it's just a 3 wave fall, and from here it's going to go above in wave 3 on a higher degree. So I don't think that is the case with the Nifty, because um, see, if you count this as a 1 2 3, up till there I'm okay. But this wave 5, this doesn't look like a 5 wave rise from here. This is just a 3 wave rise, and if you particularly break down this structure into an hourly time frame, this is not a 5 wave structure. There's only 3 wave structure. So that's why I am being skeptical that we are going to all time high again anytime soon. Okay, we are going to go all time high, but not on this current rally. So that's what I'm saying at this moment. And what I am betting is, this entire is an X wave of the larger degree of W wave. Okay, so this is just a counter trend move, and we are going to go back again. If you say an equality to the current uh, W wave to X wave, the equality comes somewhere around 14,670, which is roughly 38.2% of the entire rise as well. So let's just check it again from the bottom to all-time high. If we apply, so 38.2% comes somewhere around 14,394. So I'm betting that this level should be tested before Nifty starts moving higher. Or you never know, because see, this higher degree WXY, then again X and Z can be, there you cannot neglect. So as of now, what we are anticipating is that Nifty should come back to test 14,600 to 14,300 levels before it move higher. Okay, so that's our view on a daily time frame. Now let's move on early time frame. If we are marking this as a 1 2 3 4 5, this is wrong. So this is how I would like to mark here is, and we are doing this, like, since very early. This is W, X, this entire is y, then again x, and this is z. Okay, so if somebody comes to me and asks me like why this wave y is so larger, I mean why it is so extended, so there is no answer to that, because there is no guideline, or there is nothing like that wave y cannot extend, or it should be in some particular Fibonacci zone. So there is no rule to that. And if you see clearly, this is only three wave rise here. This is x, then again y will contain abc, in which this is A, this is B, and in a C you will have five waves. This is 1, 2, 3, 4, and a 5. So that completes this Y wave. Then again three wave fall into X, and again a three wave rise and two wave Z. So if you could see properly this wave Z, if anybody is marking this as a fifth wave of an impulse, that is clearly wrong, because this is not a five wave rise. And if you are marking, if you want to mark this correctly, it should be like this is 1, 2, 3, 4, and a truncated fifth wave here as of A, and then a three wave fall in wave B. Then you have particular, I mean this is an ending diagonal. If you zoom it properly, see, this entire is wave 1, this is again wave 2, this is wave 3, a wave 4 here, and a wave 5. So if you draw a trend line from here to here, it's an ending diagonal. So it's an unusual ending diagonal, but that's how it is. Okay, so there's only three waves, A, B, and a C, and it's not an impulse. So if it is not an impulse, this entire rise is a corrective rise, and if the corrective rise is completed, from there we should be seeing an impulsive fall, and that will confirm that the rise from the bottom of 15,200 is over at some around 18,100 odd levels, and we have started the downfall again. That means we have started the main trend. And what is the main trend here? Main trend is a downtrend. It's a consolidation, or whatever you call it. But the final leg of fall, that's what I'm anticipating here. It is still pending before we go all-time high again. So those who are very bullish at this moment, I am really sorry to disappoint you, because we are right here in the rally, and I told you guys, if you open just my last video which I uploaded on the YouTube, and I was pretty sure that I told you guys that it should at least reach up to 78.6% of the fall, which was coming somewhere around 70,872. If you see it clearly, I've just changed it to the weekly chart, and you see no weekly candle has closed above this level. So it is showing, and I told you guys why I am being skeptical of this 78.6% level and not 61.8% level. However, 61.8% is a golden retracement. But if you see, Elliott wave is all about the price and action and the history which repeats itself in a particular pattern. So if you see the pattern here, every rise which is or every counter trend which is going up again is at least hitting 78.6%. It's not stopping at 61.8%. See here, if you see this counter trend, it went right above 78.6% before it retraced the entire move. Okay, again this move, this was also just above 78.6%, and it made a doji there. And what a classic reversal, or you can say the book reversal. Like you see a very bullish candle here, then again an indecisive candle here, and a bearish candle here. So sort of an evening star pattern here, it formed here, and then you see the fall right here. The same way, if you see here, if I am considering this entire fall as a one some sort of corrective fall which is completed here. Let's say this is a W, a bigger W, a larger degree W, which contains this WXYZ, a W and a X here, and if I'm looking for a Y wave here, so you must understand that we need to take a retracement up to all-time high to this 15,200, and if you do it, so you'll find that 78.6% level, which was working very perfectly at this highs, even at this highs, and it is working exactly same at this retracement, the entire retracement of the first leg of fall, and 78.6%. See how magical it is. So you must understand the Elliott wave, how it works, and what is the basis of Elliott waves. Is it's like it's the um, it's the repetition of the same patterns that you see in the stock market. So you must and you have to understand what kind of patterns are going on in the market. You have to analyze it by yourself, and then you analyze your study, and then you see the price action, if the price action is supporting your studies or not. Okay, so this thing I already told you, and we were on the hourly chart. And so this should be the proper way of marking. This should be W, X, Y, X and a Z. So if you see from here, it should be an impulsive fall, and as far as I can see, this looks like an impulsive fall in this five waves. This was wave 1, this is 2, this entire is wave 3, this is wave 4, and this is wave 5. Wave 5 was again an ending diagonal here. You can see this is ABC as 1, 2, 3, 4 and a 5. So if you connect this 2 to, okay, so this is 2, you have to connect to 2, then a 4 and a 5. Now you connect to 1 and a 3, and you see it's a perfect ending diagonal which was formed here. And above the breakout of this ending diagonal, it has retested it again. So that's a perfect theory where you can go long here as well. So, and one more thing, if it is 1 2 3 4 5, this just a start, it has just started an impulse on the downside, and this should be a counter move only. So I would like to mark this as an A, B and a C instead of marking this an impulse. This should be A, B and a C. And I think it has completed the retracement here, which is somewhere around 50% of the entire fall. And yes, so it's perfectly getting rejected at 50%. Also, if you see price action wise, this is a very strong supply zone. Okay, from here, so this was the zone. Okay, if you see this, okay, so this was the zone where it was taking support earlier and was trying to defend these levels. And once it was broken down here, okay, now it is acting as a resistance, and I'm pretty sure that from here only we should see a very good downfall. So it's not about, see, currently SGX index is down 160 points, and while I'm making this video, and I'm pretty sure you guys must be thinking that now it is 160 points down and now you're talking about the fall, so that doesn't make sense. So that's why I'm telling you, you must join our Telegram channel. We have shared this entire chart well before, when it was, down or up. If you say on a 5 minutes chart, if you talk about the intraday chart, you must go and check our Telegram channel. We're pretty sure, like, it was for bank Nifty, but the same applies for Nifty as well, that one leg of fall, another impulse has started here. This is just a 1 2 and a 3 is starting. Okay, so what I'm trying to say here is the one shorter degree impulse has started here into the form of 1 2 3 4 and a 5. So it's going to get deeper in the retracement. And I hope you guys understand what I'm trying to say here. Don't be long, don't be excessively long. If you want to be longs with your own theories, I am not declining it. You can go longs, but do hedging, because the macros are not that good. Even the micros are getting, disturbed. And but this, what I'm trying to tell you here is, if you see the dollar chart, I'm sorry this video is getting longer, but I would like to sum up everything in just only one video, because I don't know when the next time I'm going to deliver the next video. So I would like to just put up everything which I think I should share with you guys in a one video. I'm doing it, and see how beautifully the dollar index has rallied. And if you see how wonderfully this dragonfly doji kind of thing is happening on a weekly basis. So if it manages to closes about this levels, I'm pretty sure the next month or the next week it's going to be a very bullish. And if the US dollar is on a bullish side, our index, our rupee is getting weakened. At the same time, if you see our I'll just share one more thing with you, which I've already shared in our Telegram channel, that you must take a look on this chart as well. This is our bond yields on the 10 years bond yields. See, This is a chart from 1999. So this is the resistance line. It has been facing continuously and getting rejected at these levels. But whenever you see this, whenever it was getting rejected and it has come back again at this level, so it was getting rejected again. So if you see the price action, it is pretty clear. It's getting support at these levels, at these levels, at these levels. It's getting rejection at this level. So prices are converging, and at some point of time, it's going to break out. I think it is going to break out because see the strength is, it is getting the strength. It's not weakening in the like if we talk about the strength wise, so the strength is increasing, the prices are being sideways, so it's pretty sure that it's going to break out one or the other day, or let's say anytime soon. And I have been telling this to you guys since very long. If you are Telegram channel followers, so you must be knowing that we should not be excessively long on the any of the index, or the large caps or the mid caps. So try avoiding doing some portfolio picks at this moment, because I'm pretty sure that you will find this stocks which you are buying at this moment, and it must be somewhere around 20 or 30% discount in the latest stage. So whenever this US bond yields are also outperforming, whenever this Indian 10-year bond yields will break out these levels, trust me, the Indian equity market will bleed, and it will bleed very badly. So the panic selling will start and soon. And why I'm saying the bottom is not yet made, because there's one more reason. When the bottoms are made when there is an extreme panic in the market. I have not seen any kind of panic. See, these moves are very sideways. These moves are very sideways, and there's there's no panic in the market so far. Okay, there's no panic in the market so far, because every time it gets on the lower side, it gets bought again and being sold again, then being bought again, being sold again, being bought again. Okay, so there's a kind of sideways movement. So there's no panic in the market. When the real panic will start, when it will start falling in a straight line, and then you will see a selling climax. At that time, it will be a very good opportunity to buy for a longer term, or we will see at that time how the price action is behaving at that time. Okay, based on that we will take a decision, but at this moment it is not wise to go long, and I would not advise anybody who is following me to go long at this moment. If you want to short, yes, you're welcome, because we have many short positions open, and we have also given some positions as a BTST, short positions in Nifty, Bank Nifty. If you will analyze Bank Nifty as well, because what Nifty and Bank Nifty is doing, like Nifty has not gone past the all-time high, while Bank Nifty has gone past the all-time high. So many people are bullish on banks or PSU banks, and they they say, like, everything bank is going to outperform and whatnot, but that's not the case. We'll analyze Bank Nifty as well for you guys. So I'll open a Bank Nifty chart for you. And if you see Bank Nifty, so Bank Nifty, it was here only. See, it was not even it has not even passed these levels. It was somewhere here, and I told you guys that it is going to go up. It may cross these levels, may give a fake out, but it become a little more bullish. It went up to this high. It punched a new all-time high. But one thing is pretty sure. See, you must understand that if this is A, B, and a C, some sort of one leg is completed here. Okay, so if I mark this as an A, and just a moment, I'll delete it again. Okay, some sort of correction is completed here, first leg of fall, and this rises again of three waves. If it has completed three waves, by breaking this low, I would be bullish. I would be bullish. Okay, but it has not broken this low, and again has started going up and broke this high. So what does it make? That this entire move is a corrective fall as A. This was A, B, and a C as wave B, and we are going for a wave C. So if you ask me, then it should not surpass the high of wave A, right? So technically yes, but if you go, if you think technically, I mean, like, uh, some sort of correction, what kind of correction it is doing, then this correction is the flat correction. Okay, it's a flat correction. And which kind of flat correction? So it's expanded flat correction or irregular flat correction. Okay, so it's an irregular flat correction or expanded flat correction in which you will see A, B, C as three waves. Then you will see again A, B, C as three waves, wave B, and then you will see five waves down from here, 1, 2, 3, 4, and a 5 as a wave C. So here I think the bank nifty will complete its correction in an expanded flat, and from here we're going to see a very good bull run then after. So until this doesn't happen, I am not bullish at all on banks as well, because the price action and my theory doesn't say you should be long on the banks at this moment. So that's all for the Nifty and Bank Nifty, and there are some other stocks which we'll discuss in some other videos. It's very long video, so I'll just submit all here only. Okay, so I guess this video will help you in trading for some next weeks or months. And if you like this video, please do share, like, and subscribe. And if you like this video, and if you want your friends and your relatives to learn something from this, do share with them, and please help us to grow. We'll meet in the next video. Till then, take care. Bye bye.